Hey, this is Sam with the Nashville Home Guys, and today we're going to continue our series on what is happening in the Middle Tennessee market, especially as these interest rates continue to change. Some consumer confidence is coming back. Interest rates have lowered just a little bit, but let's look and see what the November numbers showed, what I think it means for right now as far as buying and selling, and what I think is going to happen in the future. Let's hop right into it.
Let's hop into the average sales price of closed homes that happened in November. Over here, you're going to see the comparison of November of last year. Bottom line is Davidson County, top line is Williamson County. So the peak sales price was really in June at $691,000. And you'll see that actually we were back at $693,000 in November. We saw 3 months of decline. And then the past 2 months, we've ticked back up again in the average. Williamson County, pretty similar story. We actually peaked about back in February, and then we had another peak right here in July, and we're pretty much back at that same amount at $1,161,000 and some change. Now, here's the important number. Compared to last year, we're still up considerably. So Davidson County still saw a 17.7% increase in the average closed home versus November of last year, and Williamson County is up almost 25%. So prices are holding steady despite the high interest rate, and I think that's very important. Now let's look at the new listings hitting the market. We saw a peak in June, again, super normal because people are out of schools. Summertime is the time that people start moving. And as we move towards the holiday season, we always see a decrease. Now, here's something that's interesting. Williamson County actually saw a little bit of new listing growth as compared to last year. And I think a lot of that has to do with just a lot of the new construction that's hit the market in areas like Spring Hill, Thompson Station, Nolensville, etc. In Davidson County, we saw a drastic decline in new listings. So we're actually down 20% in new listings. So even though things are holding on the market longer, we're not seeing as much new inventory hit the market during the season as we have seen in years prior. Now, this graph is showing us the amount of homes for sale that are still active at the end of a given month. So again, last thing we looked at was how many new listings hit the market. This is looking at the total number of homes for sale at the end of November. Again, similar story. June, July, super popular months, inventory coming on the market. However, we have seen, even though this is declining, again, we're going to see seasonality here. We're still 3% up over last year in Williamson County. So we have seen a little bit more inventory for this season, but in Davidson County, an 11% decrease. So that's important. Again, inventory is really not growing considerably. All right, now here's where we're starting to see some of the drastic changes since the interest rate has changed and consumer confidence has decreased. So pending sales, this is the amount of homes that were under contract in November, and you can see that we have just had a sharp decline. As the interest rate has risen, a lot of people have pulled out of the market, and we've seen just a lot less activity going on. So pending sales are down nearly 51% in Davidson County and nearly 55% in Williamson County. And the same is going to be here for the closed sales. So the amount of closed sales that happened in November. And again, similar story. We are down nearly 42% in Davidson County and almost 40% in Williamson County, 38.9%. So again, we're seeing a huge decrease in activity that is outside the regular seasonality of the market. Now let's look at another important trend, days on market. So houses, we've all seen it. They've been staying on market longer. People have been reducing the price. I even think that this is not very indicative of what I've been seeing on the market currently. But this does go to show how important it is when you price your home. So if a house is still in great condition and priced properly in the market, it's still going to sell relatively quick. The average days on market is up over 100%. So it's obviously changing. I've seen stuff on the market average 30 to 60 days. It's not uncommon to see a house be up for 30 to 60 days. So pricing super important, being patient is really important, and the condition of your home is really important. Month supply. So this is looking at, how much inventory do we have versus looking at the average of the pending sales to see how long it would take to consume all available inventory. So we talk a lot about a balanced market. 6 months of supply is considered a balanced market. Under 6 months is still a seller's market. And then over 6 months would be a buyer's market, 6 months being neutral again, or balanced. We have started to see a drastic increase in the amount of month supply of homes that we have. So again, back in February, we were nearly operating at a month supply of inventory in Williamson County and a month and a half in Davidson. And in some price points, it was under that. So this is looking at, all of the price points that we have in these counties, which that can skew the data a little bit. However, overall, this is not healthy. And this is when we were seeing 20, 30, 40, 50 offers on properties, stuff going for 110, 120% of list price. We've started to see a buildup of inventory. Now, again, remember from our new listings that not that many listings are hitting the market, but stuff is staying on the market longer and we're having a lot less buyer activity. So right now we've got nearly a 3-month supply of inventory on the market, which is an increase of 32%, and a 2.7-month supply of inventory on the market, up 8%. Now, people would tell you that this is still a heavy seller's market. But since the interest rate is so high, it is a little bit of a more balanced game than what you would expect right now. Again, because we just don't have a influx of buyers in the market like we did earlier this year. And then I want to go to the sales price as a percentage of the original sales price. So this would be when somebody originally listed a property, what is the average sales price of that property? So again, shuffling back over to these early year or months earlier in the year in summer, we saw as high as 105, 106% on average of a sales price of the original list price. Now we're averaging around 96%, which is a decrease of nearly 6% in Williamson County, and very similar in Davidson County. So nearly a 5.5% decrease, or things selling for 95.5% of original list price.
So is it a good time to buy? If you can and you're comfortable with a little bit of a higher payment right now, I do think it is a good time to buy, because when that rate drops in a year, maybe a little bit over a year, there's gonna be a lot of buyers that enter back into the market, and we don't have the inventory still to sustain that. And as consumer confidence raises, as the markets become more stabilized, as the Fed doesn't raise the interest rate as much, we will start to see a decrease in those mortgage rates, I think, sooner than later. So if you can hop in the market now, it's a great time. Sellers are making concessions. They're paying for closing costs, rate buy downs. You're allowed to write offers with home sale contingencies, inspection contingencies. So where you might have had a lower rate in the past and had to go, 105, 106% of list price, now you have a higher rate, so your payment is going to be higher, but you're not paying as much for the same house. So it is a good time to buy, and you do have a lot of time to make decisions, and it's not so much of a fire sale where you're having to rush into a house and compete with 20 offers. In fact, I haven't seen a multiple offer for neither one of my sellers or buyers really in the past 3 months, and that's been very interesting to me, because that's all we dealt with earlier this year. If you're a seller, is it a good time to sell? Again, I think that depends on your situation. If you're selling in the market and then you're looking for your upgrade house or for another house in the market, or maybe an investment, yes, I do think it is, because even though you might be getting a little bit less for your house, or not as much as you were, back in May and June, then you're also able to go out there though and write a home sale contingency and not have to give away all your chips in the bargaining deal when you're looking for your new house. And just like everybody else, you have more inventory to choose from. I think everybody's a little bit more understanding of what is going on right now. So, I do think in this current time, it is more balanced, and we are seeing, I think, a little bit more realistic expectations from all sides. If you are selling though, pricing your house is super important. The condition of your house is super important. And it's just a reminder to be patient and knowing that the market is more normal. So it is okay if your house is on the market for 30 days. We do and are expecting that the interest rate is going to drop probably in a year, maybe a little bit over. But the prediction is that we will start to see, mid to low fives again, possibly in a year. And so when that interest rate comes back down and the market sees a lot more stability, a lot of buyers are going to jump back in the market. And depending on how our inventory keeps stacking, we probably are still not going to have enough houses on the market for when people jump back in. So I do think that prices will remain resilient. And when people jump back in, people are going to spend and be really competitive once again. So, this is always evolving, and we're continuing to look at these numbers on a monthly basis. We would love to run these numbers specifically for you because, again, they do change. If you're looking in the $400,000 to $600,000 price point, the numbers that I just showed you are going to be a lot different than if you're looking into the million, $1.5 million price point. So happy to run any scenarios, any areas, zip codes if you want to. Also, if you're not working with us, it's super important that you all are looking at these trends together so that you're putting yourself in the best position possible when you're buying and or selling a house. So, as always, this is Sam with the Nashville Home Guys. If you have any questions, you can shoot us an email, team@nashvillehomeguys.com, and we'll get you moving. Thanks.